Right. Hello and welcome everyone to this webinar organized by Private Equity Wire in partnership with Linedata. My name is Aftab Bose. I head up the content and research here at Private Equity Wire, and I'll be moderating today's discussion, which is based on a piece of research that we've done in partnership with Linedata, where we surveyed more than 100 GPs across the Private Equity Wire audience, but also our sister brand Hedge Week, to kind of understand where we are with AI implementation across the alternative asset management space. I mean, we all know that there's a lot of excitement around AI. I mean, I was in New York for the SALT conference for the past 2 days, and on the panels there, we're talking about the real cutting edge, how AI is being leveraged for everything from listening pattern analysis in music to bioengineering. And it's always fascinating to hear these discussions, but the purpose of the research was to really survey alternative asset managers and see what is really the state of play, how are they really being able to use it in their day-to-day, and what is blocking the progress towards this more value-added future that we could potentially have. As it turns out, there's quite a bit of variety within each asset class, but also from one asset class to the next. Our panel today represents a wide variety. We have the private markets perspective, we have the hedge fund perspective, and we have someone who works across both with a number of clients. I'll hand over to the panel to introduce themselves. Start with you, Steve.
Great, thank you very much. So I'm Steve Jones. I work for Living Bridge. I've been at Living Bridge for just over 6 years now, and Living Bridge are a mid-market private equity firm focusing on high growth businesses across the technology, healthcare, consumer sectors. And I lead our data and analytics function.
Right, Adrian.
Sure. My name is Adrian Devala-Franklin, and I'm CEO of 𝐲𝐨𝐿 Asset Management, an AI-powered hedge fund with offices in Toronto and New York. Prior to co-founding 𝐲𝐿 in 2015, I was an investment manager with some of the world's largest financial institutions, including the now $600 billion Canada Pension Plan Investment Board in Toronto, Excel KKR in Silicon Valley, and Goldman Sachs in New York and San Francisco, and worked across public markets, private equity, and venture capital. And I can definitely say that 𝐲𝐿 has been the most interesting adventure of all. We've built a quantitative hedge fund and deep tech laboratory exclusively focused on self-evolving artificial intelligence-powered investment strategies. Traditional systematic or quant strategies tend to be book smart. Humans design them and they rely on past patterns that work until they don't. Whereas our proprietary AI platform that we named Wallace generates strategies that are street smart, able to enter unknown environments and rapidly adapt. Each day, Wallace analyzes vast amounts of technical, fundamental news and sentiment data, and evolves to changing markets through a survival of the fittest type of evolutionary mechanism. As a result, we avoid the pitfalls of human bias and ego in an effort to deliver alpha under ever-changing market conditions. And I would say we truly believe that Wallace represents a future for public markets and investment managers of fully transparent AI that drives uncorrelated and differentiated type of return strategies.
Hi, 𝐲𝐲𝐽 here. I work for Linedata. Linedata is a global financial technology company providing, for the last 25 years, we've been providing software services, data analytics solutions to our client base, which comprises of asset management firms, both institutional and alternative. And within alternative, we service hedge funds, private markets, in all sizes of these firms, fund administrators, transfer agencies, and as well as lending and leasing firms. My role within Linedata is over the last 16 plus years, I've worked predominantly with the hedge funds and institutional asset managers, advising them on portfolio management solutions, trading and order management software. And more recently, for the last few years, I've been heading the data and AI services practice here, working with our clients on providing them private models, developing, deploying them on-prem or within cloud, and giving them the cost benefits and operational efficiencies that they cannot do otherwise. So looking forward to this webinar.
Yeah, brilliant. Thank you for that. And quite a range of perspectives. But I mean, just before we go into it, I wanted to say to everyone that, I mean, AI discussions, it is difficult. It's increasingly difficult to bring new things to the table when you're talking about AI. And that's what we're going to try and do today is hopefully the diversity of perspectives will help there. But also, I think the best way for everyone listening in to really get value would be if you have a question for the panel or something that you'd like just discussed, please do put it in the Q&A and we can kind of get around to as many as possible. The idea is to keep this discussion as real and relatable as possible. And in that endeavor, if we kick off with just, how are each of you using AI right now? We looked at use cases in our research, and the vast majority at the moment across the board are using it in a very productivity-oriented way in terms of incremental productivity benefits, where kind of transcription and document reading and document analysis level of AI implementation. I just wanted to hear from each one of you. There's obviously a wide range of implementation stages here as well, but each one of you about how you're deploying AI in your organization, how far the use cases stretch. Steve, it'd be great if you could bring the private markets perspective to start with.
Yeah. So just a little bit more color on my role here. So I sit across our internal data analytics needs as well as across the portfolio and new investment. And what we've got to try and do there is balance out where AI can play a role. And then the kind of other thing we're trying to balance out is try not to get so hung up on the use cases before we start to get AI into kind of the hands of the investment team and the value creation teams and finance and operations and so on. Because we want to try and get everyone to be pretty hands-on and understand how this data works, what they can ask, how they can integrate it into their workflows as well, so they can be better positioned to provide feedback to us in terms of how AI could look to kind of drive productivity gains or open up new opportunities for us. So I think that there's obviously the productivity gains piecework. We spoke about things like before when we were trying to consume PDFs and we were trying to look at logos and take logos and find a company name and their website. That's just all ingested now. That's a productivity gain. The second piece is around we're sitting on like 25 years of real kind of rich investment data. When I say rich investment data, I'm talking about investment committee papers, the minutes from those investment committee papers, and we're thinking about, well, how can we use that information to inform us, inform the decisions that we're making today as well. So that's when you kind of think about, okay, so this is more about how we can use AI strategically in our business to help inform decisions that we're going to make today and in the next 2 to 3 years. So that's where you kind of get hung up, right? That's where you kind of get something you're thinking, okay, well, that's where you really need to have your use cases. And say, okay, if you think there's going to be something groundbreaking around about how we're making investment decisions, this is where you need to be really tight in your use cases, get your AI working groups together, really figure out what it is we're trying to pull out. So that's how we're trying to kind of balance this all off in terms of what's going to be really useful in a workflow perspective, what's going to be small productivity gains, and where should we be looking at using this data, AI, more strategically.
I think if I could just follow up really quickly, because the private markets is unique from the hedge fund space in that you have the AI deployment both at the firm level as well as then going into portfolio companies. So when you look at most of your energy and time, what side of that spectrum is most of it deployed?
So most of it is internally. It is internally. So what we do, because if in some of our businesses that are quite mature in that data space, let's say assuming our consumer businesses, they have really experienced data teams and data scientists, that are helping to evolve their platform. So you take Love Holidays, for example. I'd wager it's one of the most AI sophisticated travel platforms out there in the market. We don't need to kind of burden them with, have they used Copilot, etc. But for the other across the assets, across the other investments, what we're trying to say to them is, or our message to them is look, we need to understand what's going to be a threat in your industry and in your industry, and we need to understand what the opportunities are. But in the meantime, before we kind of get a hand around AI, the most important thing to do is just get ready for it. Start to make sure you've got clean data, make sure you've got access to kind of your kind of like hygiene data. That it could be for a fact that if you're a software business, make sure you've got access to, all your net revenue retention, your gross revenue retention, understand how revenue is recognized within your accounts, just simple stuff at the time. So we're just saying to get ready across our portfolio.
Right. Okay. And I mean, bringing this over to you, Adrian. Obviously, the hedge fund space, it has a much quicker scope for transformation, let's say, and then there's a lot more AI-driven firms in that space, including yourself. So could you give us an idea in terms of use case, what it means for your firm to be AI-driven?
Sure. I would say we are relatively mature in terms of our deployment of AI. We would consider ourselves a pure play AI hedge funds, of which arguably there's only a few in the world, but there's many more applications for hedge funds and the investment industry and public markets as more tools are coming out. 𝐲𝐨𝐮𝐫 has been a deep tech specialist in the AI field for many years. We developed an AI architecture specifically designed for the challenges of financial markets. It's a system that's always changing. The data is changing. And our proprietary AI, Wallace, has been running all of the 𝐲𝐨𝐿 investment process end to end since 2017. It actually managed to win us the 2021 HFM US Quant Award for Best Emerging Manager. And now because of it, we have the privilege of running customized high sharp strategies for sophisticated global institutions and family offices. Wallace really is the culmination of over 20 years of research into what works, and more importantly, what doesn't work when trying to apply AI machine learning to financial markets. What really sets the Wallace platform apart is the transparency and ability to explain the decisions it's making. With all the hype around AI these days, I'm sure participants on this call have heard of neural networks and deep learning, or more recently, large language models, generative pre-trained transformers. And traditional AI architectures tend to be somewhat static and a bit of a black box, which in many fields doesn't necessarily matter as long as the answers are good. They're great tools to teach your phone how to recognize your face and lock itself, for an AI to learn to play chess. The big question becomes, what happens if the rules of chess change in every turn? All of a sudden, you need a system that can adapt and learn in real time. And obviously, the rules of financial markets are changing every day. For instance, if a ChatGPT hallucinates or an AI classifies a dog instead of a cat, it's no big deal. Make a mistake in the markets and you are quickly punished, losing tens or hundreds of millions of dollars. So to solve this problem, 𝐲𝐿 had to develop an entirely new approach to the evolutionary computing camp of AI that we call genosynthetic algorithms, or GSA for short. And the Wallace AI platform uses GSA to analyze thousands of securities, each from over 42 dimensions simultaneously, and monitors the complex interrelationship between these securities over time. And as a result, the system was able to uncover market patterns that are arguably 2 or 3 levels deeper than your typical quantitative factors. The question becomes, how do you stay ahead of changing markets? And so in our case, Wallace continually evolves through a survival of the fittest type of mechanism. Overnight, Wallace will generate tens of thousands of generations of virtual portfolio managers, all competing to improve performance against each other. And in a matter of hours, Wallace achieves what would take millions of years of natural selection in the real world. The AI really replaces, for us at least, an army of human portfolio managers and analysts, and it doesn't require sleep or vacations or pep talks. It's quite relentless in its goal to try to maximize alpha. Most recently, we've made a big leap. And that leap was running singular investment strategies like an equity long short or currency strategy to a multi-strategy approach, combining numerous independent cross-asset return streams for better diversification to improve the Sharpe ratio, so returns per unit of risk. And this is pretty big development for us because traditional multi-manager investment platforms in the space need to identify and hire hundreds of human managers and pods to benefit from that multi-strategy diversification. The pod operating expenses are often actually passed through to the end clients, layering significant costs on top of management and performance fees. What we've done with our multi-manager in a box is it strives to deliver similar type of diversification at a fraction of the cost. So there really are only a handful of pure play AI type hedge funds in the world that I'm aware of globally, and I think that's going to change. Ones with fully systematic investment strategies designed by an AI from the ground up to be truly differentiated. That said, there are more and more hedge funds and investment managers out there leveraging AI tools to improve their existing strategies or to help in existing fundamental research processes. And this is considered more of a quantamental approach. And I think what you run up against is really the legacy factor. If you're a large investment manager with many people at your firm, you're not going to all of a sudden say, you know what, let's turn back the clock and start developing our strategies from scratch using AI. If you've got something that works, you can start to utilize these tools to either streamline existing processes or to help you gain more insight. You know, if you think about it, we as humans can juggle maybe 7 variables in our minds at any given time. The AI systems, depending on what they are just able to see more. They can look at information flows in parallel for many years. It's able to see farther than humans can. So, for example, if a fundamental research manager is interested in certain industry sectors, you can have potentially language models and natural language processing parse through investor reports and call transcripts to flag interesting information, whereas, you know, a human manager might only be able to get through a few of these reports in any given day. So I think even though there's only a handful of pure play AI quant funds that are using the AI end to end, there are many applications for those across the public markets investment industry.
Interesting. And I think we'll come to, I mean, managing those volumes of data and kind of, you know, how you approach that exercise towards the end. But Ashmita, if I could bring this to you, obviously, in a way, private markets and hedge funds represent the two ends of the spectrum when it comes to AI implementation in the alternatives asset management space. It is a big range, and there's obviously you work with so many firms. You know, where would you place the majority of firms on their journey at the moment?
Yeah, it's interesting to hear, Steve and Adrian's viewpoints. I think we are seeing a lot of it across our client base too, specifically for in terms of private markets and hedge funds. When we started on the traditional AI journey using machine learning for predictive analytics, and again, Linedata being operational experts in areas of trade operations, compliance, reporting, NAVs, and things like that. We realize that this is more on the institutional side where these type of workflows are looking for more efficiency and improvements. For hedge funds and private credit firms, again, with the ChatGPT and the whole generative AI coming into play, they have now, the conversations have moved into the productivity and into the efficiency domain again, right? What Adrian's doing with the quant funds and the AI used for, that is predominantly where a lot of these firms used to focus or put their efforts on the AI side, not much on the operations. But now with the language models being there to, help in small tasks, as Steve mentioned, getting information out of some notes or emails or some transcripts, we are seeing a lot of interest around scanning a lot of documents. Text to SQL is another area that we're hearing from firms where, most of the systems that these firms are using are structured databases like holding positions and trades and whatnot. And you have a senior portfolio manager asking, okay, what is my biggest holding in Tesla in the last 6 months? Having quick responses to these type of questions, that's where a lot of interest we are seeing is coming from our client base. And to add to that, firms have started looking as to combining both traditional machine learning and generative AI, right? So you are reading investment transcripts, MD&As on the companies, you're extracting sentiments and the tone, and then how you're feeding that to your more machine learning type models to then predict the next steps, right? So firms have started looking into those areas as to how to combine these different AI tools to get to the ultimate result.
It's interesting because I mean you don't draw that distinction between the traditional models and the Gen AI overlaid on top of that. Are most of the firms bedded down with traditional and now looking to integrate with find integrated use cases?
Yeah, I mean, in fact, more and more conversations are more happening towards these large language models now because the way, ChatGPT has democratized the access, right? Traditional machine learning or predictive analytics was mostly in the hands of, a small data science or technology teams. But now with the variety of tools available for everybody, now you don't have to be a data science expert to be able to apply AI in your day-to-day work, right? So definitely the conversations have shifted, especially on the productivity, information extraction side, to leveraging these type of natural language-based models.
Right, I think so. I mean, obviously, use cases split the audience quite a bit and split the panelists as well in terms of what they're doing with AI. But I think some of the things that might unify us or apply across the board are some of the challenges that come with AI. Things like basic. I mean, to start off with, how do you access AI? How do you find what the right solution is for you? How do you go about, sourcing the expertise, sourcing the tools that you need to? If I could bring it back to you, Steve, I mean, how do you go about doing that?
Yeah, so it's the kind of my answers really seem really boring here, but we speak to everyone, right? And we get demos, we go through the process. I think very early on, you got to kind of think you need a big team if you're going to start to try and build this yourself, do all the research yourself. And there are people out there far smarter than us that have done this, gone through the problems, gone through the challenges, and looking to there's this kind of feeling I think that when you look at using third parties, where you go outside, you think, okay, but that's great, but what if the landscape changes tomorrow? What if the landscape, and then have we made the right choice? Um, I mean, that is a concern, but and it's a concern for us. But to think that they're not already anticipating that and growing at the same pace is usually a bit unfair because these third parties are starting to or trying to chase and stay ahead of the market at the same rate as we are. So we talk, we understand what's out there in the market. A lot of it is the same. Trying to understand, we've got a good definition in terms of what we want at Living Bridge, which is we want to, one, be better informed about how to mitigate risk from an investment perspective and spot opportunities. But also, we in terms of day-to-day life, we want to understand how generative AI or AI can integrate into our workflow. Right? And we just keep it that's the priority for today, or sorry, for 2024. And that really helps us kind of get a good view on who are the people who can help us with that challenge. And again, like I said, we also speak, to other people in private equity about the same challenges they're going through. Now, in terms of how we look in terms of from a new investment perspective, this is again where we are talking to experts, and we've gone out and we found specific experts who can help us kind of go through the AI diligence process and thinking. If we're looking into a kind of into like pharma research, or if we're looking into IT, MSPs, any kind of services, we just go out and say, well, who can help us with this thinking? Sometimes it's PwC, sometimes, but you just got to keep just joining those networks. And I know that sometimes you kind of think you may come to these webinars, they're saying the same things, they're saying the same, but there's one or two things that you'll pick out from there, which will be slightly different, which incrementally over time, you kind of start to get a good broad view of who can help you to answer specific questions as you go along this journey, because there is a lot of information out there. But you've just got to be just the two things I would say is one, try and stick to one thing you're trying to achieve this year, and so then that help refine who can help you. And secondly, just understand from an investment perspective, who are the best people in the market to help you with that. Just pick up the phone to them and just get an understanding of how they're feeling about the market.
You mentioned, I mean, obviously that a lot of what's out there is very similar. And also, I mean, there is the challenge of the fact that it's actually difficult to find a true AI guru out there. I mean, someone who is well versed with the technology, because everyone is still trying to understand the technology, but also B, a lot of it is the same. So finding something that directly maps to your firm's needs is always a challenge when you're going out and buying from third parties. What stops you from thinking of perhaps building internally?
The cost of the people, one. And two, I think it's to do with the fact that the only thing stopping us from building internally right now is the fact that we can't outpace the market on this at the moment, right? And if we just take, for example, our humble Copilot subscription that we've got, there's no way we can outpace how that's evolving. 8 weeks ago, we started using it internally to make a long paragraph into a more succinct, concise paragraph. That was pretty cool. Now or in a couple of weeks' time, you can create customized Copilots on your SharePoint. So you'll have Copilot answering specific questions based on how you've trained it to answer questions based on the specific documents that's in that. That's pretty cool, right? We can't outpace that. So there's no point. If there's something there where we're thinking about, actually, do you know what, we're going to use the latest AI technology to understand how we source deals better, then maybe that would be something that we would look to build in-house. But again, we'd survey the market.
Yeah, I mean, the use of AI to source deals and make investment decisions on the private market side, we'll come to that, because that's a data problem. That's a data opacity problem in the private market space. And that's what kind of holds it back from being as advanced along that spectrum as maybe hedge fund strategies. But before that, if I could come to the other panelists on this build versus buy question, Adrian, speaking of true AI gurus, I mean, you have one in-house, and you've very much built internally. Could you give us a bit about, how you went about that, and, was it a costly process? Because cost is a huge factor here.
Sure. I mean, at the outset of this, I think the big question becomes when you're looking at, say, language models and GPTs and Gen AI, which has sort of taken over the conversation in the last 12 months, they built this new architecture, which is very broad, and people are now trying to find what are the use cases for it? How can we fine tune it and allow it to do certain things? We were taking the opposite approach. We said, well, here's the problem we're trying to solve. Are there tools available to solve it? And if not, we're forced to create those focused and narrow AI tools ourselves. So far, we've had to build all of our AI software and hardware architecture in-house. And considerations around this were capability, transparency, and security. And Aftab, as you mentioned, we have the good fortune of working with Dr. Alexander Bogdan, an AI scientist who's spent 40 years in the field. So for us, we can do a lot with a relatively small team. We had to combine domain expertise in both AI as well as domain expertise in financial markets, because we've seen teams get very tripped up here using off-the-shelf machine learning approaches or things that might work in a textbook. Pretty sure the markets will show you that they change quickly and all of a sudden you get rolled. So to achieve a multi-manager in a box, replacing thousands of human portfolio managers, we had to equip the Wallace AI platform with customized hardware. Instead of a singular model running millions of years worth of evolution each night, we now had to evolve many strategies, ones that were not just good on their own, but also independent to each other. And on top of that, we needed to create a meta model to control things like risk, variable exposure, leverage levels, tactical allocation across different asset classes. It's kind of like trying to solve a Rubik's Cube where every small square is itself another Rubik's Cube. The complexity explodes exponentially. And the problem was existing compute hardware and the software associated with it wasn't designed for the way our genosynthetic algorithms work. These days, most systems are tuned for deep learning types of algorithms. And compared to mainstream neural networks, LLMs, GPTs, our GSAs are actually far more computationally complex and compute power hungry. Each GSA neuron has many different data inputs at once and functions versus, say, the simple dot product architecture of traditional neural nets. So to solve this problem, we had to, again, go the in-house route and build, custom designing a one-of-a-kind supercomputer that would fit at our Toronto headquarters. So having our own on-site supercomputer also means security. We know where our data is at all times, and the system is air-gapped from the outside world. It's also upgradable to expand computing power for the future. It took us over a year to design and build, but the Wallace supercomputer is actually capable of quadrillions of floating point calculations per second and packs thousands of square feet of hardware footprint and data center level cooling requirements into a 7.5 by 5 foot fluoro inert liquid cooled system. To get somewhat technical with it, when we're thinking about different AI approaches, GSA really sets itself apart from more traditional AI architectures by its ability to find optimal solutions in a problem space using various different data types, which at least for the moment, the typical sort of LLMs aren't doing, but that could change. And these data types include things like integers, booleans, floats, complex and imaginary real numbers. When dealing with such a vast hyperdimensional search space, think cosmic scales, a single optimization technique run on traditional computing hardware could take many years to find an acceptable solution. However, we have to make investment decisions in a matter of hours or minutes. And so another big win for us was discovering a novel approach to handling sequential time series data. Again, typical neural net type architecture matrixizes problems, pulls them apart, and puts them back together so that they can compute quickly, but you can't necessarily go back and figure out what was going on there within the hidden layers or necessarily reflect the temporal nature of the data. So Wallace can parallelize this type of data without the typical black box effect of deep learning, and this transparency significantly accelerates the analysis process. So I believe we're pushing the boundaries of what's possible in the evolutionary computing camp, and that was really by necessity, right? The idea of build versus buy. If you go out there and the solution doesn't exist, then you have to start to think about, what are the costs and timelines for building these types of solutions in-house to help solve very specific narrow problems. But for larger problems, if there's off-the-shelf solutions, related to Copilot and ChatGPT, you can more rapidly deploy these, and these days the guardrails around them allow you to very quickly create agents to come up with specific solutions to problems you have.
Right. Thank you for that. We do have a question from the audience, and I encourage more of you to please do chime in via the Q&A section for our panels. But before that, I mean, Ashmita, build versus buy is not a new debate. It's an ongoing debate for many years about general technology products. Help firms who are listening in, help them analyze what the pros and cons are. And obviously we've seen the spectrum here, and cost is such a big factor. So, I mean, how can firms approach this best?
Yeah, again, as Adrian said, it all depends on what's the underlying business challenge, right? What is the business problem? And AI is just a tool, just like any other technology. So from that perspective, we have seen that firms who are dealing with more, trading, investments related scenarios, which is more their own IP, those sort of areas are more handled in-house. But things like on the operational side, which is more standardized, there is no proprietary sort of workflows or processes involved. Dealing with partners like Linedata helps them achieve the ROIs that they're looking to sort of otherwise be tricky, because for things like managing, trade or post-trade settlements, or your pricing alerts or compliance issues, exception fatigues, and things like that, which are very common problems across most of the firms, right? And since we deal with a lot of these clients, we have a very broad spectrum knowledge of what are the different scenarios that can happen. And as we develop these solutions and these models, AI models, we sort of bring in that operational expertise across a variety of scenarios. And for firms to take these solutions from a partner like Linedata, it helps them quickly go to kind of quickly deploy it, quickly start realizing the benefits of it, right? But that's, again, in terms of all other factors that come into play are, how do you want to handle the data? Do you want the data to be on-prem? Are you okay to have the data in a cloud environment, or send it to a third party or a service provider? With machine learning, more often than not, hardware is more accessible and things can be built more in-house. But you still have to worry about continuous learning, making sure the models stay up to date as environment changes, especially in the financial markets, which is very dynamic. These models can go obsolete pretty quickly, right? So how do you ensure that they are continuously maintained and stayed up to date with the changing market and the business scenarios? Switching to more generative AI and language model side, getting the hardware is almost is very highly cost prohibitive. Only a few big tech firms have that kind of resources to build these models from scratch. But that being said, there are a lot of tools available, as Steve was saying, right? It's hard to catch up with the market with the improvements coming pretty much on a weekly basis in some of these language models. So on that spectrum, it is again coming out to questions like, all right, we're looking to extract some information from the documents, trying to reduce the time it takes, for example, for an analyst to review a deal and extract key terms, and how does it fit into the workflow. Same factors in terms of performance, continuous learning, auditability, they are still relevant, but it's relatively on the for some of these processes, a more ready to available solution is there. I mean, there is still nothing that is out of the box that can just available on the market that you can just take in and deploy and it's production ready. So on the language model side, there's still a bit of learning. There's some customization that every firm needs to do, but bringing in a partner that can at least set up the foundational aspect of it, where it gives you the framework on which you can build your own, is where we see more trends are.
Right. We have about 7 to 8 minutes left, and I do want to leave a little bit of time to talk about, how data input makes such a difference to how AI performs. But I mean, before that, just want to come to this audience question, which is for Steve. I mean, this attendee says that they're in relatively the same journey as you are at the moment when it comes to AI implementation. So I mean, the first question is, how did you choose between, for example, Copilot versus GPT? How do you choose which tool to use? But also to follow up, something that Adrian said is that the advantage of having it in-house is the information security part. It's secure, it's secure. Whereas if you're using a third-party tool, the idea of information security, how do you think about that when you use an external tool?
Well, yeah, I mean, I won't go into too much detail on this because I think the answer, well, one, we haven't chosen between Copilot and other vendors. We just know that Copilot, we're a Microsoft house. It integrates into the workflows of everyone in the office very quickly and easily. It's an easy way to get people using it. There's some adoption challenges, and there's some things that say, actually, this is not going to be the right tool for this particular job. But we see this as something that would probably be a very quick win, and we've been quite happy with the progress of Copilot for our needs at this point in time. But that's the one that's the easiest to implement, and it kind of works to some level. And then in terms of security, then we can't offer the guarantees that Adrian can. In terms of the kind of security of our information. What we do know is that Microsoft have to adhere to the terms in our of their kind of security and data privacy agreements. We believe the information is not being used, but then again, we're not putting really like critical data in there, right? We're putting some PDFs in there, a few emails, some of the stuff which is really highly sensitive, we're not putting in there just yet. So we don't put any kind of personally identifiable information like passport numbers, salaries, and so on. We're not there yet, so we don't have to worry about that. That might be a challenge we have to think about in the future. And then maybe there's an extra security layer that comes in over the top of that.
There's another audience question that I think would be relevant for you, Adrian. But before that, Ashmita, I'm sure you have a view on this information security piece.
Yes.
Yeah.
Yeah, we deal with that all the time. Every client conversation is not complete without asking about how do you ensure my data will be secure and it will not go to OpenAI. And to answer that, there are solutions, right? There is ChatGPT and there is this, Copilot, but there are also a lot of open source language models like Meta's Llama models, or Google's Flan, or Mistral's, the French startup models, which we have, which you can download and install and deploy it in a secure environment. And we've done that for a lot of our clients. And through that, you can ensure that the environment is completely off the internet. The data that is in that sort of virtual environment, virtual machine, stays intact with no access to unauthorized parties. So, having an open source language model approach that can be privately deployed is one way where you are dealing with quite sensitive and highly, private information.
Mhm. I mean, I think this one could apply to everyone, but I mean, the most close to liquid strategies, Adrian, when could you see AI managed funds be available to the mass retail market via mutual funds or ETFs?
Well, that really depends on how quickly people are willing to give up power within those large organizations, right? You've got a lot of people who are not incentivized necessarily to do away with their jobs. So there's nothing stopping mutual funds or large investment houses from offering AI-driven strategies. In fact, there are some out there, some AI powered ETFs or mutual funds that at least are using it in their investment process. But again, the largest players, in my view, have a legacy problem, and that is, are we going to completely go back to the starting line and develop these strategies fresh from AI and rely 100% on those strategies, or, which I think makes much more sense for them, are we going to start to use the AI in the existing investment strategies for processes that they already have? And I think most investment houses are going to be going that route. You've got to be much smaller and more nimble and starting from the ground up to build the strategies with the AI from day one.
Right. I think we will have to forsake the data conversation now. That's for another webinar. But to kind of last, we have 2 minutes left. As concluding statements from each one of you, it'd be great to hear, what do you see as the role of AI in your organization in over a 3 to 5 year horizon from now? If we could start with you, Steve.
Yeah. So look, I guess to summarize what we do here, I think that you just keep widening your net of really, really good resources and people and information who can help you understand how AI is being used across businesses. I think, when you're talking about complex challenges, something that, we've all touched on, don't Gen AI is the shiny stuff, but there's a lot of businesses that have been dealing in AI for the last 15, 20, sometimes longer years, who are the real experts. And go and speak to these guys, get as much information as you can to inform your decisions. In terms of where it's going in the future, then, it's for Living Bridge in the next 2 to 5 years, it really is going to change how we think about where we invest and how we invest. In some instances, we'll be thinking more about the products that actually help businesses evolve, rather than the businesses themselves. And hopefully we should have all of this kind of like productivity challenges kind of solved by Gen AI, so that we can have people who are just spending their time using their brains to really contribute and add value rather than doing mundane tasks.
Brilliant. Thank you for that. Adrian, your 3 to 5 year plan with AI.
Sure. I mean, what's next for 𝐲𝐽𝐻? For us, we started with the AI to develop the strategies. Now we're looking at ways for Wallace AI to actually speak and formulate its thought process into sequential narratives for human understanding instead of the parallel thinking of the AI. So instead of using large language models to build the investment strategies, which we don't believe in, we've got the models that are running the strategies, but we do think that the language models can be useful to help translate the way these complex AI thinks into more of a chat function to be able to have conversations with Wallace, to allow clients to ask Wallace questions about its strategies or views on the market or on particular securities. What's next for the industry as a whole? I think a lot has changed in the past 12 months alone. The public seems to have only recently become aware of how far AI systems have come, largely due to playing with large language models and GPTs. And there's been a lot of AI innovation going on behind closed doors. So investment committees at allocators and LPs, they're playing a little bit of catch up, and they've had no choice but to get up to speed as AI becomes some part of investment processes for many firms. And as a result, our discussions have changed a lot and evolved. The question used to be, what is an AI hedge fund? And now it's a discussion about how are you different from many saying they are using AI at some point in the process. Sometimes it even becomes more of a re-education as people develop a bit of a preconceived notion of what AI is these days, right? Everything falls under the Gen AI umbrella of large language models. So far too many times now we have to say, no, we're not using ChatGPT to trade stocks in the market. And I think, as the market evolves, as institutions and organizations evolves, people will start to get an understanding that Gen AI is one pillar of AI, and there's many different camps, and all of them have their use cases for different solutions.
Brilliant. And finally, Ashmita, industry view, where do you see it going?
No, I think I agree with both Steve and Adrian's viewpoint. I mean, being in this field, I'm very optimistic about the prospect of AI. And what we focus on is having like an AI ready architecture, right? Because things will be very dynamic in this space, new models, new sort of data sets coming through. But what is foundationally required is your organization, and this is what something we're implementing within Linedata too, is having that sort of AI ready framework in place where you have the right governance and controls in terms of the data access, the trainings, the performance, the continuous learning, and then you have the control about what data to use, how to contextualize it for the right output, how to switch LLMs or AI models, right? And that kind of whole framework is where I think the effort needs to be, because as long as the baseline foundation is there, changing whether what model to use, what document to use, and who has access to what can be modularized and can be made scalable. So, we're looking at sort of building this AI-ready foundational architecture, these frameworks, which can then become the platform for, multiple applications that are integrated in the workflow.
All right, that's been very insightful. I do hope everyone listening in has been able to take away something valuable from this discussion. I've certainly found it very interesting. Big thank you to Ashmita, Steve, and Adrian for your time today, and thank you everyone for listening.